Good morning, guys. Welcome to this Thursday, October 2nd. And we got a market which is extending to the upside. So overnight is moving the market higher. We believe we're in the move out of the middle to the upside. So we are moving higher. At this point, uh, this is the beginning of the fourth quarter has been nothing but a straight shot up. And that's a little bit surprising, but okay, we'll take it. So this could start off a nice little rally going into maybe we could get an early Santa rally or something, it's not that far away. So I think we're pretty much out of that. It's the August, September the volatilities period. I mean, we had October crashes before, so that's gonna have to kind of take it a day at a time. But so far, the start of this fourth quarter has been nothing but spectacular, and we're gonna start off on the long side of the market and see how far these guys are gonna take it. There is a story driving it. It's the AI story, the AI trade that is basically driving this whole thing. You can see those are the stocks which really are moving well. There's more to it than that, obviously, but that is one big component. It's a big amount of spending going on in that arena. The news we have for today to drive the market, we had a job cuts report come out. It's a little bit on the downside. The last time was we had like 80,000 in the prior read. This time we had 54,000. Pretty good number, but it's going in the right direction, I guess. 8:30 we get jobless claims, factory orders at 10, nat gas report at 10:30. So that's pretty much what we have on tap today. The job situation, employment situation coming out on Friday probably won't come out since the government is shut down, so no employment data. And that report is just kind of it is fraught with problem as well. So I'm not sure if that's a bad thing or not, but from what I hear, that's not going to be released on Friday. So, uh, but we'll get there too on Friday morning. But we'll see what happens on Friday morning when we get there. Friday we also have PMI and ISM services and so on and so forth. But for today, this morning at 8:30 we get jobless claims, factory orders at 10, nat gas report at 10:30. That's pretty much it. So as I said, looking at the ES, pretty strong grind to the upside. We had a little bit of volatility going into end of September, but it was nothing really which totally shook them. There was a couple of down days, nothing really which ran down here and challenged this gap down here. This big low volume area had a little of a move down. That was in the last few days. They were down here for a second, but not much. No, not by any means a selling into September. And October starts off with a nice move to the upside. We are extending to the upside, so we are in a move out of the middle to the upside. So trade it as such. Not going to be super aggressive on the shorts. Going to favor the long side of the market. So we're going to buy weakness. 67.70s would be aggressive. 67 65s, 55s, 45s for rotations back up. I would say below 45s, probably take off the long bias and go back range bound. 35s or 30 here, we have more of a confirmation on that, but these two support areas, the 45s and the 30 to 35s here, these two support areas are going to be the one I'm going to be paying attention to for potentially shift in the direction. So we'll see if this will move to the upside in the overnight. It's going to be able to hold their gains, or if they are going to reverse that as we get into the day session. So we're still let's starting off the quarter. So let's see how strong this market gets. But there is definitely a case to be made for it trending higher. And when you listen to a lot of these pundits talking about how expensive the market is, and yeah, looking at some of these stocks and compared to what it was in the dot-com boom and so on and so forth, and not that expensive. These are big companies. They have actual earnings, and we have a big new trend in the market driving it. We used to be the internet beginning of the 2000s. Now the AI trade is driving it, and there is a million things happening in that arena. So I'm thinking that we have a pretty good shot at keeping this going. But we'll start off trading it from the long side of the market. Not going to be very aggressive on the shorts. We are at the highs right now, so 67.80 would be the on the short opportunity. But as I said, I'm not going to be very aggressive on the short side being price discovery. If I look for a short trade, it would be when you're looking at an exhaustion to the upside or something like that, or a nice stall on the upside. That's intraday. You can potentially take a short there, but I would favor the long side and see how far they can take it. It's always tempting when this trades higher, when they're making new highs and new lows, to take a contrarian position and try to step in front of it. You just have to be mindful. In the move out of the middle, the market is repricing itself, and you don't want to be super aggressive on that side of it. If you take short trades, just keep your stops tight in case you're wrong. Just let it stop you out. Don't get caught in a big trade. All right, so that's the ES to get started. Looking to buy weakness against the 67.70s, 65s, 55s, 45s for rotations back up. And below 45s, taking off the long bias, going back range bound below the 30, 35s here for sure. So these two support areas are the ones I'm going to key in on for my shifting bias. Now, sometimes you want to give it a little bit more room. So I'm starting at 45 here. A little bit aggressive maybe, but definitely below that 67.30s, we shift in the bias. All right, so that's how we get started on the ES this morning. Looking at the NASDAQ and the bonds. Bond market pretty much holding on to the gains. Yeah, I forgot to do the bond market, huh? Yep. So I forgot I needed to put in a level there. Right there. Right there. It's supposed to be a level. All right, so bond market is range bound, and I would say that it's been not moving a whole. They had a little bit of a move a while back here when it took this little pop to the upside right up here to the 117, 118s. They were down here flirting with the 116s, almost heading back down again, but it looks like they reversed that now. So now we are back here to the in the middle of this range around the 117s, building value. So starting off range bound, a lower edge would be 115.24, upper edge 118s, and that's the range we are trading in. So 116 to 118 pretty much is what we are trading in. Right now we are in the middle of that. So I would start with flat out range bound, look at the sell strength, 17 or 6 to 7s, 10 to 11s, 16 17s or 17 18s here for rotations down. Looking to buy 16 28s, 24s, and down to the 16s for rotations back up. So 3 levels up, 3 levels down. Let's see what they're going to do from there. So that's how we get started on this. I don't think any of the news today is going to really rock the bond market. The employment situation Friday could have, but if it doesn't come out, I think the bond market is just going to sit in a range. And we are in that government shutdown right now. Nothing is, market is just shrugging it off and not taking it too seriously. But we'll see if it starts dragging out. There could certainly be an impact on the market. So we'll see. Hopefully it's short-lived. It's we'll see. Market has so far not had any reaction to it at all. If anything, it's just trading higher in the face of it. NASDAQ just took out the upper level I put in there. They're heading higher at a pretty good clip. So NASDAQ in a really good pre-pricing mode. And you can see here they are, that's a move out of the middle to the upside. So taking out the upper edge at 25,020 is extending to the upside. So starting off on the long side on the NASDAQ, looking to buy a weakness. At this point, looking to buy against the 25,060s, 30s, 25,000s, 24,970s for rotations up. A little crunched up here, but if they start trading, but if they take out all those levels and trade below the 970s, we're taking out the long bias, going back range bound. So that's where we are on the NASDAQ. And price discovery, I mean, I had this edge looked like it was the high at the time. Now it just blew through it. So we are in price discovery to the upside when it comes to the NASDAQ. So, and I think this is a lot about that AI trade. Looking at some of these AI stock, is AI, and with that AI trade is all this modular nuclear stuff. It's quantum computing, it's chip and data center buildouts. All those categories are part of that trade, which is driving it higher. Massive amount of money is being spent there to keep up. It's a massive race, and that's going to keep going for a while. So it's not starting. It's not just a bubble. It's going to keep going, and that's going to be a dominating feature of our lives in short order. All right, so that's the Nasdaq trade, both ES and the Nasdaq from the long side to get started. Looking at the Nasdaq and the, let me see here, where I'm at, gold, oil and gold. There we go. So oil and gold, looking for moves to the upside. So looking at the gold is way up there, and it's kind of stalled for a day or so. But they made it up to 3,900. Now they're right back up there again. And the gold is just absolutely going nuts on the upside. Now, why gold is trading high like this is, I mean, it's anyone's guess, really. There's plenty of these big players, big banks buying gold. Now, the underlying reasoning behind it, if it's fear of global conflict or if fear about the overall economic system, I can't put my finger on it. I don't hear good arguments one way or the other. It's a bunch of people, a bunch of analysts I can hear. I hear talking about it, but it's nothing quite makes sense. It almost feels like a panic trade. Money fleeing into gold, or it could be a pylon effect. Gold has been trading higher, so people are chasing it. Could be that too. I think it's something more fundamental behind it. We'll find out when it happens. If it's something happening, if it's a big concern about the overall stability in the world or something. But a lot of players are buying gold. Could be that BRICS nation thing we talked about before, that people buying gold for that purpose, that alternative to the US currency. But again, a lot of big gold being bought, and we're going to just trade it as such. So we don't really need to know why, but why helps us to a certain extent. But we just look at the perspective, the capital flow, and then we trade it as such. So we trade it from the long side of the market right now. We're looking to buy weakness against the 3905s, 3898, 3886. 3880s for rotations back up. I think if it trades below that 3880s, you're going to look for a retracement trade. That would be this little low volume area. Nice three-letter ledge. That comes out, we have a bunch of single prints and potentially a nice potential retracement trade in front of us, or in front of us if that happens. So watch that 3880s. Last one to buy against would be 3870s, but they start backing off. We may have a nice technical trade running it probably all the way down here to the 3800s again, just to reverse retest that. And trust me, gold can do that in a heartbeat. It is a very volatile market right now. Sometimes you want to trade it, but it's, as you can see, that when it starts moving, it moves. V-top, hard retracement. If you try to buy on the way up here, you would just got crushed on the way down. So that is gold for you. Trade that with a lot of caution, but I would try to trade it from the long side of the market. And then oil, it's kind of drifting lower. They have been a slow grind here. They're pushing that 61 edge lower. They were down here, took it out a little bit yesterday. They're down into new lows at 61.20. So I think we are in a good spot now to potentially extend to the downside or break this lower. We'll see if they can hold on to it. They're still pushing the edges and not in one of those convincing breakdowns just yet. But you can see here they're down here pushing that lower edge. And if they start taking out that 61s, we have a price discovery in front of us on the way down. So we have a lot of stuff happening or opening up at that point. We have this big attractor we were trading in before. So if you want to see what that looks like, see in the bigger picture. So we have we can run it all the way down here to that 57 edge pretty quick. And thereafter, we're probably going to find a little bit more support. But we are back down in this lower range again. And we are potentially heading lower. So I would start from looking for early weakness, looking to sell strength, and see how far they can take it on the downside. So in other words, looking to sell against the 6160s, 62s, 6220s for rotations down. Above 6220s, I'm going to be looking for retracement back to the mean. So that's kind of it. So looking to buy any early weakness. but not to a fault. So if this support holds, and we may see a nice retracement to the mean. So we are not quite there with busting through and really start extending to the downside. They're kind of pushing it, but not quite breaking down just yet. So looking at initially looking to sell early strength for rotations down. And if they start taking out the 61.20 now, I would just stay on the short side, see how far they can take it. All right, so that's oil and gold. So oil from the short side to get started, gold from the long side. Back to the ES, and both ES and NASDAQ are just making new highs. Here we go, heading higher. So let's see how far they can take it. All right, guys, we'll wrap it there, and I'll see you back at 11:30 for the next update. So good trading, and I will see you back then.